My name is Nathan. I'm the founder of MetaSignals. We help you to trade crypto with a proven edge. Lifetime access is ending soon. metasignals.io/NFT. Today, let's take a look at the alert cards and how to read an alert. Right now, there's around 100 different algorithms that are scanning 64 pairs across 10 different timeframes, 24/7. When the algorithms see what they're looking for, they trigger an alert in real time, which goes to the discord.metasignals.io. And the alert includes the data that you're looking at now. So let's just go through it quickly. It's important to understand the basics of what this all means. This is an alert for Bitcoin on the 24-hour time frame. It's green, meaning potential long. The algo version is not so important. Right now, we've created a number of new algorithms that are on version 3. So when you see version 3, you know that's the latest algorithm. We still have a number of version 2 algorithms that provide a solid edge that are still live. So that's the algo version. Not too important, but just so you're aware. The strategy, all that really matters here is the first decimal place. There's strategy 1, 2, 3, and 4. I'll get into that in another video. We did a video quite a long time ago. Back then, we referred to this as power, but it directly relates to what the joule is doing at the time of the alert. The joule is our proprietary indicator. It's at the core of all of the alerts, and understanding the joule, having it on your charts, will help you to better understand the rationale for why this alert triggered, at least some of the rationale, because we use dozens of different data points. But like I said, the joule is at the core. So we'll do another video and go through the joule in depth and the different strategy 1, 2, 3, and 4 variations. This is a strategy 1, which while we're here means that we have the fast oscillator above the pink, above the yellow. And by the way, this is a rather ugly one, but mathematically we do have the blue, pink, and yellow. All of the algorithms look to data on Binance, USDT, perpetual futures. Most of our members are not trading on Binance, and they're doing just fine because most of these pairs trade so similarly across all the different exchanges. But just so you understand, when you look at a Binance USDT perps chart, like here, you see the candle close 88,581.5, and that's the exact price at the time of the alert. The date and time is always in UTC. Now we have the big one, the stop loss close below, which I think we probably have some members even after 2 years who haven't fully taken this one in. So most people see stop loss and they just assume if price touches your stop loss, then you're out of the trade. You can trade like that. We choose not to, simply because long term, your equity curve is going to look a lot better if you wait for a candle close below the stop loss level on the time frame of the alert. So in this case, without a 24-hour close below 84,581.77, we're not going to exit the trade. You can automate this with alltradey.com, so you don't have to sit and watch the trade. That's especially useful when you're on a 45-minute or a 1-hour time frame. You know, you don't want to be coming back every hour for potentially 20, 30 hours checking the candle closures. When you trade this way, you also need to have an emergency static stop loss. If you're wondering why, just remember October 10th. October 10th, 2025. It's crypto, things happen. You need to have a point where you're just, whatever happens, I'm out of this trade. I'm not waiting for a close below. There's different ways to approach this. We could probably do a whole video just on the emergency static stop loss. One easy way to do it is to take the distance from the alert price to the stop loss close below value. If it's 100%, then if I'm just eyeballing it here, extend it out by another 50%, and that's your emergency static stop loss. Some people with some more TA experience may look for key levels. You know, we have a recent low, wick low here. So some people may look to place this emergency static stop loss under recent key areas of interest. Other people may treat it as a serious emergency only, which in this case, you know, might be deep down below our prior low of this cycle so far. Different people will approach this differently. We can't tell you right now the best way for every alert in terms of choosing this emergency static stop loss. But in our next version of our backtester, we will include a calculation for the emergency static stop loss, which will also appear on the alert card. So you'll understand the ramifications for using an emergency static stop loss at a value that's proposed on the alert card. Also in AllTradey, you can set this emergency static stop loss. So you can set your close below value, where AllTradey will watch the trade and close only if, in this case, we see a daily close below 84,581.77. And you can add a second value, the emergency static stop loss. So just any touch of your static stop loss and you're out. Highly recommend using AllTradey for that, unless you're just living in front of the screen and you don't mind babysitting a trade. The targets are pretty self-explanatory. We've got the 3 different targets here. Each target is followed by the risk-reward ratio. And for those who aren't familiar, a risk-reward ratio of 1 means you're risking 1 of something, let's say $100, to make $100. So this first take profit level is equidistant to the stop loss close below level. Of course, when you're waiting for the close below, you're potentially going to realize a lower RR when you do win the trade. But we have to base this number on something, and the data point we have is the stop loss close below value. Many times the alert price at the time that the alert triggers, the price is not the ideal entry. So if you're able to identify opportunities for getting a deeper entry, you may want to keep the stop loss close below here and turn it into an emergency static stop loss. For example, if you had entered at 87,000 and you keep this as an emergency static stop loss, your RR to the TP1 here is now more than 1. But your win rate is naturally going to come down over time, because this level here, the stop loss close below, is designed for waiting for an actual close below. Again, different people are going to approach it differently. We can't tell you the perfect way to trade every alert. It's just good to be aware of what the data points mean, and especially of the fact that when price action is chopping like this, usually you don't need to rush into the trade. I mean, here you've had 2.5 days already, and you could have easily gotten a much better entry than the price at the time of the alert. Then at the bottom here, we have win rate, profit factor, percent to stop loss, and bars. Win rate correlates with each take profit level. So historically, the TP1 level in this setup is hit 75% of the time. Going for TP2, now you've reduced your win rate historically to 43%. And TP3, you've reduced it to 34%. Of course, at TP2, for example, even though you're only winning historically 43% of the time, your risk-reward ratio is increasing to over 3. So it's actually more profitable to go for TP2 over the long run than to go for TP1, even though TP1 has the higher win rate. This win rate is something that only matters in the context of the RR. We could give you many, many different strategies with a 95% win rate if the RR was 0.2, and your long-term equity curve would be a disaster. So when you hear about different signal sites talking about super high win rates, it doesn't really matter without the context of what's the RR in relation to the win rate. Even on TP3 with a 34% win rate, your natural inclination for someone new to this would be, well, 34% is terrible. Yeah, but if you're risking $100 to make 691 and you're winning 1/3 of the time, you're going to come out ahead. Different traders will have a different approach to this, because some people want to be in and out quickly. Some people don't want to lose 65% of the time, even if long-term, that's the best way to approach it. Long-term, I'm talking 2, 3, 4 years. So again, we provide the setup, we provide the data, and it's up to you to decide how to execute. Then we have profit factor. That's the total wins divided by the total losses over the lifetime of the strategy. And then we have percent to stop loss. So if we take the price at the time of the alert and go down to the stop loss close below value, and we call this distance 100%. Then a percent to stop loss value of 51% means that on average, we come down about halfway towards this stop loss value before eventually going up and hitting TP1. It's important to remember that this is an average across the lifetime of this strategy. So there's going to be times where, there's some big news event, or the charts are lining up with 3 drives of bullish div on multiple time frames, and it just takes off immediately. There's always going to be these exceptions. So you've got to be aware of what's happening on the chart. But if you're trading more blindly, this number helps to guide you. You know, when you see it at 95% or even over 100%, you're really expecting price to pull deep into the stop loss zone or even wick below it before finally taking off. So that can help you to get a better entry. The bars is the average number of candles for a resolution at TP1, 2, and 3. So you can see here, on average, we would have already hit TP1. It's Christmas Day here, so not much volume. We've been chopping for a number of weeks, maybe not much interest. So we haven't even gotten above the alert price as of right now. And you can see if you go for TP3, on average, that takes 18 candles, in this case, 18 days. If you're the kind of person who is comfortable sitting in a trade for a few weeks, then maybe you want to go for TP3 here, if you're also comfortable with that lower win rate. And you can also use this as a bit of a guide. If we know that TP1 gets hit on average in just over 2 candles, 2 days in this case, and we drag on to 5, 6, 7, 8 days, the longer we go past that average, the less confident we are that it's going to play out in our favor. So hopefully this has been helpful. For any questions, visit us in the Discord, discord.metasignals.io. Check out the NFT with lifetime access, metasignals.io/NFT. Thank you, and see you next time.